Hi, my name's Jamie Dimon. I loan out money that we actually don't have. We just type it up on a screen and then we charge you interest on it. But we don't have enough real money to back all of the loans that we give out. Hey everybody, for those of you that are easily fooled, that wasn't really Jamie Dimon talking, that was me. I'll be your host today for this broadcast. It is Tuesday, June 15th, 2021. Is Jamie Dimon, is he forecasting a deflationary collapse or correction in the economy? Well, something's going on. We're going to talk about that. But first, I have a real quick announcement. Thank you everybody for being here. Now, some of you may have noticed that there are comments left and they have the same logo as mine. So there's people out there pretending to be me or Bull Boom Bear Bust, and they basically steal my logo and then they try to get you to go over to a different platform. So here's the thing. I'm not on hardly any other platforms. I'm not on WhatsApp. I see somebody posting as me saying I'm on WhatsApp, and I'm not on Patreon anymore. So if anyone says they're Patreon, it's me. It's not me. I used to post on some of these platforms, but I didn't have the time, and there was a lot of headaches with some of them. I'm in a couple places, but I don't update there. I really don't post, and those places are Twitter and Facebook. I interact a little bit on Twitter, but it's very limited. So yeah, again, anyone that's saying they're me, that's not on those other apps, don't listen to what they're saying because it's not me. Pretty much the only place I upload to regularly is YouTube. So as long as YouTube lets me have a platform, I'll still be here as the primary output. Now let's talk about Jamie Dimon, what he said, what he's doing, and try to analyze what it means, right? So Jamie Dimon, JP Morgan Chase CEO, is hoarding cash because of a very good chance of inflation, basically saying inflation is here to stay. So if inflation's here to stay, wouldn't you want to invest your cash instead of sitting in cash? Right? Many people are asking that question, and a lot of people are talking about this, including many YouTube economists that I look at and watch. But here's the thing, and a lot of you realize this, but let's pick this apart a little bit and analyze this. So what Jamie Dimon is saying here is that the Fed is going to come in because of inflation, because inflation is not actually transitory, because it's going to be permanent. So therefore, the Fed is going to have to come in and tighten and taper. And he's basically saying that the Fed coming in and doing those actions, tapering, tightening, or both, is going to basically cause the correction. Right? So JP Morgan, in this case Jamie Dimon, choosing to stockpile cash rather than using it to buy treasuries or other investments because of the possibility of higher inflation will force the Federal Reserve to boost interest rates. And what happens at even the thought, even the hint of higher interest rates? Markets do not like that. Right? So most of what we see today in investing is not analyzing individual companies and their earnings. That used to be the thing to do for stock investors and traders. Now it's basically front running the Fed. So if you know the inflation monster behind the scenes is always going to cause higher prices by supporting the markets no matter what, lower interest rates, unlimited bond and treasury buying, then the smart thing to do would be to go long and go bullish in the markets. So it's a little bit difficult to come out with what he means here, because on one hand he's saying there's a good chance of inflation being permanent, but then again, if the Fed comes in and scares the markets or affects the markets, scaring the market will affect the market because traders look at what the Fed is saying and doing, then that means the inflation will not be permanent. And that's the reason why he's in cash. Now remember, banks also make interest on cash. And JP Morgan expects now $52.5 billion in net interest income in 2021. Right? So that tells us that they are expecting the Fed to move their hand. Now we have the meeting tomorrow, Wednesday, which is going to be June 16th. We'll see what the Fed says. I seriously doubt they're going to hint at raising rates. They may say some words that people might translate as being indicator of tightening. But we'll have to see and how the markets react to it. But please let me know what you think what does Jamie Dimon know that maybe most people don't know? So just to sum it up here, what this headline should have said was inflation is here to stay until the Fed comes in and changes things. Right, that's what I got out of it. Please let me know down in the comments what you got out of it. But that's what a lot of other YouTubers are also saying, people that I watch. Now let's talk about some more bad news that came out. Producer prices climbed 6.6% in May. That is the largest 12-month increase on record. An all-time high increase in producer prices. Not good. Not good for the U.S. consumer. Also, more bad news. Consumer sales declined 1.3%. That was much worse than expected. It was only a 0.6% estimated decline in retail sales. And we've seen this trend when stimulus checks aren't sent out for a few months. You start to see sales, retail sales, and spending drop. And then, of course, a big surge after stimulus checks are sent out. So it looks to me like they're going to have to keep all of these rescue programs in place. All of the moratoriums on evictions and foreclosures. Supposedly, student loans are going to have to start being repaid again in October. I don't see that happening. Otherwise, there's going to be big trouble that they're not going to be able to hide. So I'm thinking that they're going to have to keep it going. Even though the Fed is talking of tapering, I think it's just a bunch of hot air because they don't want to admit that they're backed into a corner. Now, to figure out how the economy is doing, look at what's being done. Not what is said, but what's being done. So if the economy was so great, if everybody's recovered economically, financially, why do we need to be talking about a push for a fourth stimulus check? CBS News. It is being discussed. It's being pushed. We also have the child tax credit stimulus coming out next month, starting in July. So parents in the United States are going to get monthly payouts through the end of the year. Who knows? They may extend it, but for now, it's at least 6 months. And it even says it right here in this article. Despite that financial assistance, talking about all the previous stimulus checks, millions of Americans remain in financial distress, with about 4 in 10 people saying their income remains below pre-pandemic levels. And currently, nearly 16 million people are receiving some sort of jobless assistance. The unemployment rate is still over 6%. We know that's a flawed and fake number. But compared to pre-pandemic flawed and fake unemployment number, it's still much higher, almost twice as high. So get ready, folks. We could see some chaos if the Fed even hints at tightening or raising rates. We could see something come in and throw these markets into chaos. Some sort of event. My prediction is going to be some sort of maybe an attack or blackout situation where the banks go dark or the system goes dark. Even if it's just a power outage, it's going to cause chaos within 1 to 2 days because 99.9% of people are reliant on swiping their card, going to the grocery store, and in the digital financial realm. So stay cautious, continue to prepare, continue stacking, stay well, stay safe, everybody. Talk to you very, very soon. What do you think? Thanks, everybody. Bye for now. Peace.